The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Everyone, Basil Chapman, Tiger Ignitions Hour, and this is the Thursday edition, Thursday, September the 11th, and of course our thoughts go out on the 9/11 always to the victims of 9/11, and what can I say, it's just, it still hurts, and something we will always remember. Looking at the market, the Dow's down 55 at 17,012. The S&P is down 4.5 at 1999. And this is going to be very interesting because at this particular point, you've got the comp index down 14, kind of moving with the markets. It had shown strength. Remember, for a while, the QQQ was just extraordinarily strong. Now it's starting to weaken. Comp index is at 45.72, down 13. Gold is down 5. It's relentless, 12.39. The dollar is rallying, and it had been rallying, and right now it's down 8 cents at 84.21. However, what's very important is that the Dow is holding up near the highs. It's having a high-level consolidation at this particular point, which is not giving gold any chance at all to have that reflex rally. It will happen probably next week, but it isn't happening right now. And then I would still call it just a reflex rally at this particular point. You've got silver, and silver's down 24 cents at 18.68. You've got platinum down 8 at 13.73. Haven't looked at platinum for a while. We'll look at platinum in a while. And copper's back down at $3.09. Down at 180. It's going to be very interesting. You got crude oil at 91.98, up 31 cents. Bonds are up 5/30 seconds at 137 and 11/30 seconds, and the euro is up just a fraction. Now, this is what I wanted to talk about. This is such an important moment. Why? Look, the E-minis shows you that peak D, that nominal high of 2011, round number all-time high. Following day, it has a high of 2010, round number. I have a particular technique that I call the two-bar reversal. And this has all the signs of a very quiet, subtle two-bar reversal. I have another technique that I call the silent doji. Wait a minute, silent doji? There it is. There's a little doji on the side of the high on the 2nd of September at 2006.25. Make that high of 2011, all-time high on the 3rd. And wait a minute, the next day has another little doji candle, double doji, on a silent double doji. Whoa. Got to be careful of that. Why? For two reasons. One is if after that particular pullback at peak D in the Chapman wave, the MACD, the moving average convergence divergence, starts to turn down with the stochastic. Look at the failure in the stochastic. That is a huge negative. That's a right shoulder failure in the Chapman wave methodology. That's in my CD book, the book that I made about 6-7 years ago. Everything there is still relevant, very relevant. And in chapter, let me see, this is the right side, the right shoulder, I think it's chapter 21, side 362, introducing the Chapman wave methodology. I talk about the right shoulder failure. And we've seen that in a number of stocks. And I'm really cautious. I'm going to talk about this cautiousness in a moment. But look, the E-minis are now down under the 9 EMA. That level is at 1994.50. The stochastic's down at 56%. That's not good. Even if there's a bounce, it's not good. And that's the stochastic, and the MACD has crossed negatively. And so far, the histogram, that little 0% line, shows two little red candles from yesterday and today. Not a good sign. The 120-minute chart has a down channel, and the down channel has resistance. It tried to sneak above this morning. It failed to do that. But I would definitely say at 1993.50, another 3 points higher, you're suddenly seeing at least a push to the upside in a counter trend move that calling counter trend because I believe we've already started. We've got a sell mode in the 120-minute chart. A real good chance that there's a sell signal but it has not gone to a sell mode yet in the daily chart of the E-minis. So now let's just put this together in a format that I'm going to show is just real simple. As I do that, I want to talk about something that's happened over the past 3 weeks. My impression now of the public, this is the general public, but it doesn't just concern the public, it now concerns the institutional investors. That is the people, these are the people that handle the flows, the inflows and outflows in the funds where they choose particular stocks and they want to hold, and they only get out, they hardly ever go short, but they only want to lighten up when things really look bad. My impression at this particular point, for the very first time, I'm going to talk about complacency. I talked about it before in a different sense. Now I think what we're looking at is a certain complacency that infers that the majority of investors of all types have made the decision over the last, I would say, a month, 3 weeks to 6 weeks. It could be a little longer. But because we've come back so strongly after every decline, because the bears have just been smacked down for 5 years now, every time there's been a pullback, there was only one 20 to 22% decline. And ever since then, we've had just nominal, they're getting smaller and smaller. My impression is that we've gotten to a point where the majority of people are saying, I don't want to listen to anybody anymore. Every time I've gotten out of my stocks, I can't get back in. I'm staying in what I've got. And in fact, I might even start adding a little bit more, but I am definitely not going to short, number one. And number two, I'm not listening to anyone who's bearish. That's just my impression. And my impression is based on empirical data. That is, it's based on hard facts. And it's also based on something that to me is enlightening, because I never expected at this particular point that we would get to this particular level of complacency, given the fact that the news itself continues to have these, even if they're momentary, but they are negative effects. I think people are becoming blasé. And as a result, I thought that I was just getting some kind of a short-term signal here, and all I can, a short-term sell signal right across the board. Let me now run through. This is exactly what I want to do. Peak D in the E-minis, daily. Leg F/A in the weekly chart. Don't even talk about whether it's an F or an A. I'll tell you the parameters that'll make it convincing to me. The Dow, INDU. The Dow is peak D top at 17,161. Made on the 3rd, made on the 4th. Let me type that in so I don't have to keep checking it. 9-4. And what about it? Well, I've got a plus sign. I should have, because of the diamonds, I put a down arrow. I should put a down arrow, and I'm going to be consistent. I'm going to put the down arrow. Normally, the down arrow says we've gone from a sell signal to a sell mode, because in the Chapman wave, the price has been trading under the 9 EMA. The MACD has crossed negative, and the slow stochastic has gone well under 80%. I was waiting for the MACD to cross negative, so that's why I didn't there. But in fact, I'm going to put that in, even though the MACD could sort of flatten out and allow for one quick pop to the upside. Why? Because almost all the other criteria are there, and that says it's a sell signal, but technically I've not gotten to a sell mode yet. A Dow closed under 16,009. I believe it'll be, 16,920 to 16,900. Closing below that, I'd say definitely going to a sell mode. All right? Another thing, while I was out this morning, I had to do some errands. I saw the market open down, and then there was that rally that says every time the market's down, you're going to get buyers coming in. Said to myself, okay, we've gone from a minus 50s, that's when I saw it, to minus 40s. I bet we get to a minus 30s, and that's going to be the test for me. So I check it out while I'm doing my errands, and I see minus 35, minus 33. I think it even went to minus 28 in the Dow, minus 2.80 in the S&P, and then out of the blue, minus 38, minus 42. Then a little bit of a rally, and then it went down to minus 55 again. I'm thinking that if today is a failure at the close, if we go back down and we close towards the low of the day, there'll be a lot of people that have been doing some buying here that won't get disturbed at all, but they'll say, gee, I guess it'll be Friday or Monday before we go back to the all-time highs. And if we don't do that, that's going to be a sign for me to say, especially if the VIX is, it doesn't have to rally much. It's at 13.15. It just has to hang out here, maybe close somewhere in the 13.10 to the 13.30 area. And then I'm saying to myself, okay, is this the moment where they pull the rug and we start to see deeper declines? Or is this still that phase that says there's enough buying going on that we're going to close the Dow either just slightly down or to the upside, maybe Dow 25 up, S&P up 2.80, maybe 3.20, and the comp index goes positive? We'll see. The jury is out. Why? Because in the Dow 120-minute chart, that 16,962 200-period exponential moving average, it hasn't been hit yet. We went down to a low this morning of 16,974, ran up to a high of 17,057, and now we're trading at 17,024, and the last low only went down to 16,983. Very interesting moment. But some of the sectors that I'm looking at and that we are trading in my opening call that we have gone short, some are starting to show weakness. Even when there's strength, there's weakness. So I'm watching them really closely, and we'll see what happens. That's all I can say. You put in your stops or your buy stops, and you say, hey, market, you tell me. Our one long position, I think it's only one long. Yeah, only one long, actual long position of a stock is doing very nicely. Can't complain there. We're going to see what happens. This is a very interesting period. Yep, there goes the rally. Now it's only down 40. S&P's down 276. Now let's look at something. Oh, and I have to take this away because there's no more Chapman wave stalk leg formation because we broke underneath the oval low. That negates it. There are other patterns, but that particular pattern is negated. Look at the S&P, SPX.X. S&P. Leg C, maybe a leg B down, maybe a trough B. This MACD is negative, but it is flattening out a little bit. Stochastic's looking very poor, and the price is underneath 1995, which is the 9-period exponential moving average. I'll be right back, and we'll keep up this analysis of the different sectors and maybe some of the commodities when we get back. Dow's down 41, Basil Chapman, Tiger Technicians now, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, and this is the Tiger Technicians Hour. And don't forget, you've got to look at certain factors in the marketplace that I refer to all the time, and one of those is the VIX. So we'll look at the VIX, the VIX right now, since that's part of the panoply of indicators that I want to look at, and it's at 13.08, up 20 cents. It had gone a little higher. You would have thought that it had gone, not you, but generally in the market, we would have thought that it went higher than yesterday's 14.06 high. Instead, it's at 13.67 as a high, and pulling back towards the lows. So this is saying to me, together with the complacency that I see in the, let's see, at 0.64, Richard Arm's TRIN index, short-term trading index, is saying, hey, fear, us, fear. What is fear? We don't have any fear. And that allows you a lot of room. When, how can I do this? I'll give a little lesson. In my experience, when the volatility index and the TRIN gauge ignores sudden sharp moves to the downside. Now, it's not that sharp. I would have said if it was down 90 to 120, that would be different. But even this, at this particular point, I would have thought that there would have been some bigger response in the VIX and the TRIN gauge. And as such, my experience has been, how can I want to put this graphically because I know that some of you listen, you don't necessarily always look at the charts. Imagine that I always use this as an analogy, if the price holds up, think of it as a balloon. And that balloon is up in the air, and then the wind dissipates. For some reason, we don't know, we can't see, there are no dyes in the air current so that we can see exactly what's happening. The balloon seems to hold up, but the technicals fail. Then the technicals rally, but the balloon, instead of going like, oh my goodness, what is that called? At the Museum of Science, they have it. The Bernoulli effect. I think it's the Bernoulli effect, where whatever air pressure is in it, when you push higher, that's the premium that you should see of the price. The price should go up if you've got a 3-inch air block. Then the price should go up proportionately. That proportionality is not there. The technicals run up, but the price doesn't actually go very much. It goes a little bit higher. That's usurping energy. And the next time that the technicals fail, next time the air pressure dissipates, that balloon or that price should come down, and it should come down pretty hard because it's like a rug pull. There's nothing there anymore. Sometimes it just holds up, and that's a very good sign, like the dollar. Let me use the dollar right now. Let me go there. Whoops, I'm in the wrong place. I don't even know where that letter went. The dollar, DXY. Like the dollar is having a high-level consolidation. See, long-legged doji at E. Should have pulled back sharp. You should have gone at least underneath the low of 84.04 in the dollar index from the 9th. It should be testing 83.74. MACD is still very good. Stochastic is holding at 90%, although it's dipping. Relative strength is dipping, but still strong. And yet the price is holding up. Why? Because look at the histogram of the MACD, holding beautifully above the zero line. That's that internal pressure. And there it is. The dollar's holding up. Well, when I go back and I'm talking about what can happen, there are two things that are very important. One is that if the volatility index and the short-term trading index are signaling ho-hum, nothing to see here, folks, just move along, it means that there could be a price spike to the upside, and then the technicals will follow, led by the price. But what it also says is if there is a failure and the price of the indexes starts to come down, it gives you a tremendous amount of room to get to that level, the overbought level in the VIX index on the day, which would be somewhere in the 1420 to 1430 area. Yeah, so let me just, once again, let me make this picture correct. If the indicators suggest by their negativity or by their lack of interest in the falling price that there is room for the price to go even higher, you will see the indicators signal that by going even lower. That is, the VIX will go lower and the trend index will probably go lower. But if, in fact, there is going to be a down move later in the day, and by 3:10 the market is down 68 to 86 points, the S&P is down 650 to 780, and the comp index is going down, that's where you'll see the VIX start to rally. And because it has all that room to go to the upside, it could start to push prices even lower. Whew, I hope I made that clear. I'll be back. Someone asked, Jen asked about Facebook. We'll look at that when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're going to take our first caller. We've got Jerry in the Back Bay. Hey, Jerry, how are you?
Good. How are you?
I'm well, thank you.
Yeah. My stock is Baidu.
Okay. How are you doing after the op?
Well, what I'm thinking is that I would like to buy it at around 200.
No, Jerry. Wrong question. My question was, how are you doing after your op?
Oh, yeah, the cataract operation, the doctor said perfect.
Yeah, so, you see, when you ignored it like that, I said, wow, that's a good sign. You weren't even thinking about that. Great.
Right, I know. I'm just tired of taking drops in my eye.
Well, listen, at least if that's the only thing you have to do and your eyes are feeling great, you're seeing well, that's the miracle of modern technology. Great.
Oh, you're right. It is a miracle. I'm thinking that the Alibaba deal is going to hurt some of these Chinese companies, money being dragged out of them. The deal is so big. And Baidu, I think, is a great company, but it looks vulnerable, and I think, will I get a chance to buy it at 200?
Oh, very good question. Now, the work that I've just done by just finishing up a couple of things this is the reason why, Jerry, I'm getting really cautious about this market right now. It doesn't mean to say that this is the major top or anything. I don't think that's the case, but I do think that a lot of sectors and a lot of stocks are becoming highly vulnerable. And if I look at Baidu in the monthly chart, BID is the symbol. It's a Chinese internet company, trading at 220.47, down only 21 cents today, having made an all-time high just about 7 sessions ago, and that was at 231.40, had a round number 215 low that day. The 120-minute chart at a 224 round number low. I'm looking at this and I'm saying, leg E in the monthly, almost certainly going to be a peak E in the weekly, because I don't know how it's going to get to 231.11, 12 points from here to the upside between now and tomorrow, Friday at 4 o'clock. I just don't see it. But I must tell you that this is what I'm thinking. So you're out of it and you're waiting now to get back in? Or
I don't own anything, but I'm hoping to buy it at around 200.
Okay, great. That's all I needed to know. I'm going to make the suggestion that you have a little bit of patience. It might turn out to be more time than price patience, but I'm going to make the suggestion that says, in my work, only an all-time high above 231.40 would change my outlook. Everything about this chart says, be careful. I don't know if it'll be a hat trick top, meaning that the daily peak D at 231.40 with a 224 round number low, and a long-legged doji, which has filled all the implications that I have with the technique that I use in candlesticks of refilling the little tiny wick in the middle there, and then reversing course instead of continuing on its upward trajectory. I'm suggesting that patience is going to be the game, because if instead by Tuesday, today's Thursday, yes, by Tuesday afternoon at 3 o'clock to Wednesday morning at about 11 o'clock, if Baidu is not pushed above it's a 220.71, if it hasn't pushed, doesn't even have to close, but if it hasn't pushed above 224.70 to about 226.20, somewhere in that area, I think instead, if it's down and it's below 216, but especially if it closes below 216, I would suggest to you that we're looking at least a short to intermediate term top, and it's based on the daily chart, and then it's based on the weekly chart, making both a U-shaped pattern, a double top pattern in the Chapman wave methodology. This is that double top, right, that drop bucket pattern. And if it takes out the 216 level, then immediately 212.70, the 9-period exponential moving average of the weekly kicks in. MACD is still good, but the stochastic has pulled back to 83%. The on-balance volume is really going to be the clue for me. That's how I use volume. If the on-balance volume breaks and starts to deteriorate with the price, then my suspicion is a week from tomorrow, that's Friday a week, if Baidu has touched 216, even if it has a little bit of a bounce, the best is sideways, but the worst is lower lows and lower highs. And my suspicion is that the 210 to 208 would be the level on the downside that would be really important. Why? Because on that week of July the 25th, it opens at 193. It has a low of 193, round number low, and has a high of 226. That's a 33-point move. So that candle, the way we looked at the candles, the big red candles, those ugly candles on the way down, as something to look at on the way up for certain stocks that made that U-shaped pattern, this will make an arch formation, and that's the candle I'd be looking at the moment it takes out 216. I'd say yes, I think you're going to have an opportunity to buy it lower down. The exact price, I would prefer to see how it handles the double bottom area between 210, 211, somewhere in 29. Somewhere around
209 is the 50-day MA.
Yes, you've got it as the I've got that. Let me just double check. I want to always check this one. Yeah, my 50-day moving average is at 209.30. Yep, right. I agree.
I'm hoping it breaks that.
Have patience, and you know what? It is a fantastic stock, and they've done. It looks like they've done everything right for the whole of from the middle of 2013 right up until a week or so ago. Let's see how the next phase pans out. But The weekly
really-
chart and the monthly chart, I want to tell you, the stochastic might be pulling back, but it's still at 83% in the weekly, 90% in the monthly, and the MACD
Wow.
fast-moving average, the green line, the differential, is still acting very well. So this is going
Wow.
to be a market drag down for Baidu, I think, because it does have internal strength.
Yeah, Alibaba is coming on the 18th, and that's $21 billion.
Wow. I mean, it is
Yeah.
going to have an impact, and I think it's going to have an impact on some of the high-tech sector, but it might be, everyone's expecting that we're going to rally into that. I don't know yet if that's possible. We'll know within another 2 days or so. Hey, nice call, and I'm so pleased.
Thank you very much.
Well,
Thanks a lot. I appreciate it.
Thank you for
Bye-bye.
calling, Jay. Jerry in the Back Bay in Boston. We're looking at Baidu, and as I said, I'm just going to repeat: if Baidu gets up in the 224, 226 area, doesn't even have to hold there, just has to get there and says, hey, there's enough internal strength in the fast-moving average of the MACD and the weekly charts to say it's in a rectangle high-level consolidation. If it breaks under 216, it looks like 210 to 208 will be the next level of support. So we've got that out the way. We wanted to, so we were looking at Facebook. So Facebook right now is trading it's up 44, up 77, at 77.87. It made another all-time high today. It went to 78.36, and a big cluster between the last peaks, which technically really do look like peak ABC. And one of the reasons is that the MACD turned around, then crossed positive, and the stochastic's at 82%, and it's ignoring the market so far. By the end of the day, it might be down 30 cents. Who knows? But it's acting very well. But this level of resistance, I don't know if I mentioned, just full disclosure, in my opening call subscription newsletter, daily newsletter, we are long. We've been long for a little while on Facebook. It's acting very well. I've raised the stop, but I'd like to try to keep the position. My suspicion is that it'll come down close to where we got in, and that's where I'm going to have to make a decision, and that's actually probably where I would like to get back in again. It's going to be a tough thing to hoe. But in the meantime, it's nice to have a long stock that's acting so well in a market like this. Dow's down 43, S&P's down 3.5. And look, you've got Facebook trading at 77.81, and what does that mean? It's going right into this inside track. In the Chapman Wave methodology, I have a technique that I love to teach, and it shows two trend lines. You could make it real simple. You could just go from the top to the bottom and say that's the simplest thing, or there to there. I like to put both the channel, if there's a channel, or a rising wedge when there's a rising wedge. This is very obviously now. I didn't want to make this a messy chart, but I'm going to do this for now because it's very important to show how just a simple trend line. These are trend lines. These little things are channel lines because there are two of them parallel. So remember, a channel line means you're trading between a high and a low, moving up or higher highs, higher lows. And on the way down, it's lower highs and lower lows. And a trend line is just one single line that's pointing and emphasizing what support levels and what resistance levels there are. And this says that Facebook, based on this on this weekly chart, should have tremendous support at 71 in the 71.20 area. It's a moving target because next week it'll be slightly higher, and therefore we're looking at a very narrow range. That's only 5 points down, and then all of a sudden the weekly chart could turn a little bit negative. So I'm looking at this and I'm saying, if that inside track resistance repellent zone, that's what I call it, acts like it normally does, Facebook in the next day or two should turn down and start heading towards the 73.85 level on the 9-period moving average in the weekly, and 76.76 is the 9-period moving average in the daily. Those are going to be the very important levels. Meantime, it's acting very well. So I like it. If you're long, use the 120-minute chart, which made a double top peak C1, peak C2 in the Chapman Wave methodology, pulls back, holds beautifully in the up channel, and then pop, it goes to a new recovery high for that requisite in the Chapman Wave, peak A, B, C, and finally you get your D. Now, I shouldn't say finally. Then you get your D. How D acts is going to be really important because D can often, as it did right there, on the 19th at 75.55, became a top that took it all the way down to 73.57. That really started the channel move to the upside. So now we're bumping into resistance. We'll see how that acts, and so far it's acting well. I would just say if you're long some part of your position, I would have a stop two stops. I'd have a stop if it suddenly takes out, it depends where you got in. But 77.37 if you really want to protect your gains. But if you're trying to hold this to see whether or not it can actually go to a D, if that turns out to be the case in the daily chart, then I would use a trailing stop. And if it takes out the high of today of 78.36 in the next 2 days, I would just raise that as a trading stop of maybe a point, because it doesn't give back very much these days intraday. And it's holding the 9-period moving average. 76.78 is the level to watch. Would I short it? Absolutely not. Not yet. There will be a pullback, and it'll be just a quick short. But at the same time, there are other stocks that really are way more perfect for shorting than this. Now, let's do a couple of other things. I had a question about, so in the den, we've got Tesla was a question. I had a question last night on Tesla. I gave a talk to the AAII. Is that the American Association of Individual Investors? Yeah, I think that's what it is. Out in Rhode Island, in Providence, Rhode Island. Very, very, very interesting, very nice group, very well stock-educated group, but mostly fundamentalists. Some people did some people did a lot of technical analysis, but I would say the majority were. One guy actually said to me, I've only had one trade, one position change in the last 2 years. I've had my stocks for years, Merck and all the rest. I showed them the chart of Merck. One of my attendees to my Master Trader webinar has had Merck based on the Chapman wave since forever. He was waiting for leg D in the monthly, not the daily or the weekly, but monthly charts. And it's made D, and it made D in the daily. It's making a potential F/B in the weekly. So I said, got to be taking off some money here, because it's achieved all your goals, even the left side, right side price time match in the monthly chart. So Tesla was brought up as well. Tesla, it was actually a funny situation. Why? Because the person who invited me, the host who invited me to give the talk, who was at my talk for the Boston Investors Group in August, turned around to one of the participants and said, and I never bought Tesla because you said it's never going up, and it was down at 200 back in August. So I had a chuckle, because it happens sometimes. Now, you listen to someone instead of doing your own homework. But then it turned out in the end he was just joking. He did, after all, do his homework, and he did get into it. But look at this. From the July low of 213.60, Tesla's gone in a beautiful cup formation, Chapman wave cup and ladle formation, goes to the E, pulls back, doesn't even come back to the lip of 244.49, made on the 30th of June, makes an oval pattern for the Chapman wave stalk leg formation. But it's also, you remember I spoke about this, the propeller shaft, where you can go from a certain low to a certain high, make an oval pattern, and then have a measured move to the upside. And lo and behold, it goes to 291.42, has a 288 round number high the day before. On the 4th, it goes to the high. That's the high that's been made by many of the indices. And lo and behold, it pulls back and it holds the 9 EMA. And what I had said is there's going to be a point, and I think it'll be fairly soon, that Tesla's going to be regarded as a battery company, and they do all kinds of analysis, fundamental analysis, that's very different to the car company. Yes, it's still one of the sexy cars. God, I can't believe I must have seen 5 or 6 Teslas yesterday. It's a really popular car, and there are not that many sold. But the pattern I'm looking at says be very careful, because if it makes a new recovery high, it won't be that much higher than 291.42. But if it takes out the low of yesterday, I'm going to actually say the low of the 5th, the day after its all-time high, if it takes out 272 and closes under that weekly chart is going to change its formation a lot. So just be a little careful.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. So, yeah, I was just reading this email that I got here. This is very interesting. Chris says, just a thought about why the market is holding up when technicals, MACD, stochastic, etc., are failing. Do you think that the market makers are holding the market up, strange concept, because of the Baba IPO on Tuesday? It sounds far-fetched, but there is a lot of money, bonuses hanging on to its successful launch. Well, you know, it sounds really weird. You're correct. How can a couple of people hold up markets? Not today. There was a time back when Bernard Baruch was in the markets. I mean, when you read the stories, it's just unbelievable what used to happen between bankers, the Rockefellers, the Mellons, etc., the Kennedys. I don't know how they did it. But you had to almost book an appointment to get stock in those days. Not going right into the crash, you had the tickers, so that was a little different. But up until the 1920, late 28, early 29s, it was something. But then most of those guys were short on the way down. In fact, it was a shock to me when I read that on the way down, there was the greatest number of shorts. People were correct in being short. I always thought, suckers. No, there were a lot of people that made money on the downside. Certainly the bankers did. So now you've got, I mean, it's just bigger. But you've also got maybe a lot more people trying to hold it up. So I'm not going to shunt that aside. I'm going to talk just a moment about nudging. I like it when people say, oh, they kill the market or they spike the market. There isn't a they. They are us. But what there is that, like options expiration, what happens is there's a nudge, there's a wink. When I used to conduct an orchestra or a chamber group, and when I was a professional musician, all I had to do was look at someone or just raise my eyebrows or just there's nothing. They know you, they know the nudge, they know the wink. Or move my hands a little quicker because we wanted to speed up the tempo. There was no discussion. And once they see the nudge that the market is going in a direction, whoosh, they all go in. But 5 seconds before, they had no idea. But 3 seconds, 2 seconds, 1 second, bam, and they push. It's the nudge. And that's really what you got to keep in mind. So, yeah, maybe there are a lot of nudges keeping the market up. But when I look at my work, the only thing that's missing is in the comp index, COMPX. It's the only thing, it's the only index that has gone in the 120 minutes to peak D, but it's only got a peak C1 and C2 in the daily chart. And it's leg C. There's no other way I can count it in the weekly chart. But everything else is right there to say, which is one of the reasons why we've added to our short positions. And that is because you're looking at so many stocks and indexes having made a peak D as the technicals have deteriorated. So yes, maybe a little nudging going on. Maybe they do hold up the market just long enough into Tuesday. I don't know. All I can do is, as we sign off, I'm going to give you over to Larry Pesavento. It should be a great show today. He's had wonderful calls. Let's go to this and I'll show you something that's very important. That VIX index, VIX.X, that VIX index is pulling back. It's at 1302. It should make a leg D. I don't know when the D's going to come, but it should be within 2 to 3 sessions. And then we should go into the 14s. If instead the VIX at 13.02 starts to trade in the 12.20s, that's buying pressure, and that can hold the market up. So this is what I'm looking at, and parameters to look at as we sign off. And folks, have a great rest of the day. Stay tuned for all our great programming here. Look, I will not be here tomorrow, don't forget. And 17,033 is minus 35 in the Dow. Holding nicely. Stochastic is negative at 61%, but the MACD fast-moving average is flattening out. It gives just enough strength to have a little bit of a bounce, but I'm not thinking more than a little bit of a bounce. I'm suspecting that next week we start to see a little bit deeper of a sell-off, and that's the way we're looking at it. Hey, have a wonderful day, and the Futures Hour is coming up, and I'll see you again Monday, and have a great weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.